Hi, Tom. How are you?
Good, man. Hey, I heard it's turning into fall up there, right? Is today the first day of fall? I think it is, right? Or was it
I
yesterday?
think it is, and it's gone pretty cool.
Look at you, got a sweater on.
I know, but I'm indoors, so you couldn't really tell. I know.
I like it. I like it. Okay, so let's ride this wave, man.
Okay, so let's just go through this. On the left here is the Dow Daily Chart. Here's the weekly chart, and on the right is the monthly chart. So a couple of things have happened. One is we've been warning that it looked as if all the different indices, that's the Dow, the S&P, the Qs, and the IWM, were topping out that was about the 1st of September through about the 3rd and 4th. We had gotten short via the options, the put options in the QQQs. We took nice profits in those because the next day, we went short on the first, the next day the second was a very sharp turnaround the following day. So we took some of those profits, and we were expecting that the Qs are ready for at least a relief rally, and that's kind of what we're looking at right now. In the Dow, what we've got is there was that peak F in the Chapman Wave up against Chapman Wave inside track repellent zone, pull back sharply, and there's a pattern that I look at which is both the H pattern and an oval pattern, and that oval pattern can sometimes give you, especially on the way down, a one-to-one relationship. So there's this pink bar, I'll use it, I'll go to the top of the at 29,199 on the 3rd of September, and I'll go to the trough A, and then you can see there's what I call this the Chapman Wave. It is the one-to-one extension, a parallel extension. The whole idea about this is not just a one-to-one expansion. You want to see the same angle of ascent or descent. And look at this. If I go from that peak A minus at 28,364, it almost got to, it's a little longer than the low of yesterday, which is 26,715. So here again, there are a couple of things that are going on. There's a technique that I developed a long time ago. I call it the Chapman Wave Roman candle. When this comes off a major top, it is really serious if the price goes halfway into the wick of the candle and holds there for a shorter time period. So this is a daily chart. If it was a 120-minute chart and it went to, this morning I said to my subscribers, if it goes to 26,970, goes below that, holds that for less than 60 minutes, for more than 60 minutes, expect that you're going to get a retest of the 26,715. But when it occurs after the turn down, you want to look to see if it can take out the previous high. In this case, it's that high right there on the 21st of September of 27,484. So this turnaround today is quite good. Not good enough, but it's quite good. And it suggests that if there is a push and you see the Dow close above the candle high, you can have a little bit more of a bounce and then perhaps make another H formation. Why do I say that? Because I think that the tide has turned in all the indices. Certainly the daily charts have all gone to sell modes. Some of the weekly have already, even though it's just the beginning of the week, have already gotten to sell modes. But I have to wait until Friday to be convinced about that. So the long positions that we have from March the 23rd in the Dow, that was via options. We have, I'd say today, we've been rolling out, we got to 10.5 and it actually got up to about, it had gone up to, actually went up to 80, but I said, if the Dow gets back to 27,300 today, and it actually just a few moments ago, I said, let's take off our last position there. So that's a very nice gain. That's probably about 60 something dollars. I haven't got it in front of me right now. So that'll be a nice gain. But we still have the diamonds. And one of the reasons is we got the diamonds at just under 21,000, just the beginning of April. And one of the reasons is I think that so far what I'm looking at, there's a rotation that going on that suggests that we're going to keep having these bounces, and that we might be looking at a majority of the points have been to the downside, and some of the indices already been done. And now we're looking at kind of choppy action with slightly lower lows and slightly lower highs. And that's kind of my stance at this particular point. So the other thing is we did manage in the S&P, and let me go to the SPY because that's the position that we took. we went short the SPY right there on that H pattern, and we're still short the SPY. And one of the reasons is that in this H pattern, this is a pattern that I talk about very often, and when I do my courses, I always teach these things. Here it is. So I'm always looking at three patterns: straight up, straight down, cup formation, arch formation. You can get a combination. In this case, it's a combination where the price goes sharply lower, and then it makes an arch formation. If it takes out the left side low, it means a bunch of things. If it holds, it means some other things. But the most important thing is that as it's curving around, it usually does that about the second to the fourth bar of the bounce. And you can see right here in the SPY, there it is. 1, 2, that was the third bar, and the very next day we went short. So we have that short position, and we'll see how it plays out. But the most important factor is that we've started to take, we built up some cash position. I think that's been very important. We're trying to do some. I have a technique that I use for subscribers called these are screamers, very low price stocks that we try to get, and we have a quick move, and we get out of those. So that's kind of what we're playing a little bit more now. And most importantly is that I think we're in this consolidation phase. I had spoken about bad news. I showed this particular chart right here. It's what I call let me just get it. This is here we go. I think I've changed something. There it is. So the dark news cloud cover, certainly we have a whole bunch of things that could be going on right now that could involve the market turning it negative. But we need to have that focus day in and day out. And so far, it just comes and goes. But we are making lower highs and lower lows. This is the Dow chart. But I do believe we have all the characteristics that I look for a dark news cloud cover to kind of put a pervasive kind of a cloud to cap the upside and kind of open the downside. And that's how I'm looking at the market right now, just being very cautious, expecting bounces, but I think they will fail.
And folks, very easy to get Basil's newsletter. Come over to our website at TFNN. You're going to see it right under featured content, opening call. Just hit that button. Basil, you have a great night, safe night. We look forward to the show tomorrow.
Thank you very much, Tom.
Thank you. Stay right there, folks. Come right back.